U.S. Federal Reserve Chair Jerome Powell on Wednesday told Congress that if the U.S. economy maintains its current course, further interest rate hikes are likely.
That's a pretty good guess of what will happen if the economy performs about as expected.
His comments come after the Fed's decision last week to hold rates steady, after a series of aggressive hikes aimed at reining in rising prices. But Powell cautioned against characterizing that decision as a, quote, pause.
We never used the word pause, and I wouldn't use it here today.
And Powell said the central bank's fight to lower inflation was far from over.
Inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go.
Lawmakers grilled Powell over the Fed's response to a number of bank failures in recent months. In focus was the question of raising what are called capital requirements, or how much cash a bank must hold in case of crisis.
I do note the central importance of capital. We want banks to be resilient to shocks. We want them to be able to lend in good and bad times. But, there are costs as well. And I think it's going to be, as always, a question of weighing and balancing those costs. And that's what I'll be thinking about.
Powell said a number of proposals were in the works, but were yet to be finalized or brought to the Fed's board for review.